Hi, this is 2020 A-level first paper discussion. First one, what is the main purpose of financial accounting of a firm? So the main purpose of financial accounting is provision of information for decision making of the stakeholders because they are asking the financial accounting, not management accounting. So in the management accounting, their main purpose is providing information for the management for to get their management decision to the managers. But in this case, the financial accounting, we are providing information for any stakeholder who wants information regarding to that business to take their own decisions. So answer is number 4, provision of information for decision making of the stakeholders. For 2, 3, 4, and 5, you have to consider this case study to answer all those 4 questions from 2 to 5. Second one, they ask in the order of source document used to record the transaction number 2, 3, 4, and 5. There are specific number of transactions. So you have to consider only those transaction numbers. So second one, purchase stationery on cash. So you are purchasing stationery on cash. So your cash is going out from the business. So that is payment voucher. Number 3, purchase stationery on credit. You are purchasing stock on credit, purchase invoice. And number 4, return a part of stationery purchase on credit due to defect. So when you're purchasing stocks on credit, what happened to creditors? Creditors got credit, and when that returns, so creditors got debit. So return outward source document is debit note. And fifth one, sold stationery of credit. This includes 64,000 value added tax, blah blah. So sales invoice when you are selling stocks on credit. So the correct answer for that is payment voucher, invoice, debit note, and invoice, selling invoice, right? Third one. Number 3, what is the account equation that reflects the net effect of the transaction? Number 1, 2, 3, 4. They are only considering number 1, 2, 3, 4, right? So first I invested cash by no one to commence the business. So assets increased by 300, equity increased by 300, and purchase stationery on cash. So assets minus cash 200. Again, assets increased by 200. That's what stationery is. Stock, right? Third one, purchase stationery on credit, so assets increased by 550, and credit, so which means creditors increase, liability increased by 550. Fourth one, return a part of stationery purchase 50, so return outwards, assets minus 50 and liabilities minus 50. So your net effect for the asset increased by 800, liability increased by 500, and equity increased by 300. So the correct answer for question number 3 is answer number 2. For question number 4, same transaction, they are asking if the business maintains a debtor control account, what is the correct double entry to record the transaction in the fourth question, right? Number 5. So number 5, sold stationery on credit. So this includes 64,000 value added tax. So the correct answer should be debtors debit the total with VAT 864. But when you are crediting to the sales, you have to credit the sales without VAT. So which means 800 for sales, and that VAT is 64. The correct answer for question number 4 is answer number 4. And fifth one, they ask me what is the gross profit and the net profit of the business for the month ended 30th Jan 2020. So which means you have to consider all these information. So sales given here 800 without VAT, and cost of sales of that 800 stock is 500. It's given here, right? Here. And your gross profit is 300. From that gross profit, you have to deduct the expenses. So the expenses are what? Salary is 40,000 and electricity payable 30,000. So your net profit is 230. So the correct answer for number 5, the question number 5 is answer number 1. Gross profit is 300 and the net profit is 230. To answer number 6 and 7 questions, you have to consider this case study. So 6 1, the revised balance of cash account and the balance of bank statement as at closing date. And from the 7, they ask in the increase in profit and increase or decrease in debtors control account. So here the business carried out all its cash transfers to a bank current account, and there was no difference in the closing balances of cash and bank statement at the month of February. So which means as at opening date, there is no difference between cash account and the bank statement. So the cash account balance as at closing date, as at 31st March 2020, 500. So that is your adjusted cash account opening balance. And that is not tally with the bank statement balance that you received as at 31st March 2020. 20. So these are the errors and the omissions that reveal. So we have to prepare adjusted cash account and bank reconciliation statement. So first one, a check of 100,000 deposited on 29 March 2020 has not been realized. So these are what? Deposited but not realized. So that comes under bank reconciliation statement. So if you get the adjusted cash account balance as your base, so you have to deduct, you have to subtract unrealized checks, right? And the loan installment of month of March paid on standing orders. So standing order mean business, sorry, the bank is paying by their self. It's a automatic payment, right? So after you receive the bank statement, now you know there happened a bank, sorry, standing order. So after that, you can record in the adjusted cash account. So standing order, just a cash account credit, 30,000. And a check of 80,000 deposited in the bank 30th March 2020 has been dishonored. Deposited but dishonored. So that dishonored check we have to credit to the adjusted cash account. Why? When you are depositing a check that received from the debtors, so your cash account is debit. But when it is dishonored, so which means your adjusted cash account should credit, right? And investment income 120,000 has been credited directly to the bank account. So that is direct deposits. You have to debit to the adjusted cash account. Then you can find out the adjusted cash account balance. So after that, at the bank reconciliation, you have to base the adjusted cash balance, and then from there, if it is there are unpresented checks, you have to add. But in this case, there is no any unpresented checks, but there is unrealized checks. So you have to minus unrealized checks 100, and that is your bank statement balance, right? So the correct answer for question number 6, revised balance of cash account is 510 and bank statement balance is 410. And then they ask the increase in the profit, the effections of these omissions and errors to the profit. So A, unrealized check that is not affecting to the profit. And B, there's a standing order. So standing order for loan installment. So that loan installments include interest 12,000. So that interest 12,000 is an expense. So that you should deduct from profit. And see, there is no effect to the profit because that is a dishonor check from the debtors. But the last one, an investment income 120,000. So that is an income, and your profit should increase by 120. So the net profit from these errors and omissions is net profit should increase by 108. And then they ask in the net effect in the debtors control account. So transaction number A, B, C is not affecting to the debtors, but C. So what happened in C? That check of 80,000 deposited in the bank has been dishonored. So when the check received from the debtors dishonored, so which means debtors are again increased by that amount. So increase debtors by 80,000. So the correct answer to question number 7 is answer number 4. The profit increased by 108 and the debtors increased by 80,000, right? For question number 8, which of the following statements are correct in relation to the application of accounting concepts? So A, the basis for recognition of debtors creditors is provided by accrual concept. Yes, you can. That is a correct statement. B, The basis for measuring inventories at lower of cost and the net reserve value is provided by the matching concept. No. The concept that relate to that is prudence concept, not matching concept. See, the basis for classification of assets and liabilities as current and non-current is going concern. That is correct. So the correct answer for question number 8 is answer number 4. For 9, which of the following accounting treatments reflect the application of substance over form concepts? So substance over form concepts, there is only B and C. Recognition of right of use of asset and recognition of constructive obligations of an entity as its liability. So for entire A-level syllabus, these are the only two implications that relevant for the substance over form concept. Number 10, normal traders commenced its operations on 1st of April 2020. The following information is provided for the month of April 2020. So they are asking the total income and the total expenses. So when you calculate in the total income, your credit sales is 220 that got from the Prime Entry Group in sales journal. And from that you have to minus the sales return 20. And there is a cash discount receipt file. So your total income is 205. So total expenses is cost of sales given directly here and the operating expenses given here and cash discount allowed 10 is an expense as well. So your total expenses are 180. So keep in mind trade discounts we do not consider as income and expenses when you are posting to the ledgers, right? So trade discounts you have to minus from the total and the net values you have to record in journals, but trade discounts we do not consider as in double entries for the ledger, right? So 11, Madhu commenced a business on 1st of April 2020 to manufacture face masks and it is expected to manufacture 12,000 face masks during the year ending 31st March 2021. The budgeted manufacturing overheads for this year 360,000. So the following actual costs are here given. They are asking the profit for the month and the cost of the inventory, right? So how to find the profit for the month? So first of all, you have to find out the closing inventory. So fabric cost per unit 60 and direct processing unit cost per unit is 20 and manufacturing overheads per unit is 30 because here it's given the manufacturing overheads total amount 30,000. So distributed by 1,000 units, so which means manufacturing overheads per unit is 30. So your production cost per unit is 110. Right? So they ask in the profit. So your total sales, if you sold 150, sorry, 800 units at the selling price of 150. So 800 into 150, your total sales are 120,000. And the total production cost, here you found the production cost per unit as 110. So total production cost 800 into 110, total 88,000 and non-manufacturing overheads given 20,000. That total you have to minus when you're finding the profit. So your profit is 12,000. So the correct answer for question number 11 is answer number 4. Profit for the month is 12,000 and the cost of inventory is 22,000. 12th one, an entity reported a profit of 150,000 for the year ending 31st March 2020. However, in a subsequent investigation, the following errors revealed. So they ask in the corrected profit for the year ending 31st March 2020 after correcting the above errors. So the drafted profit is given 150,000. So first one, the total credit sales 650,000 has been recorded as in sales account as 560,000. 560,000. So what happened here? Sales undervalued. So that difference you have to add to the profit. A cash discount 20,000 allowed to the creditor has not been posted. Sorry, has been posted only in the debtors control account. So which means it is not posted in the discount allowed account. So discount allowed is an expense. So you have to deduct that 20,000 from that. And here the interest income 25,000 received from the bank deposit, you credited to the interest expense account. So In principle, the double entry principle, that's wrong because the interest income you have to credit to the interest income account. But instead of that, they credited to the interest expense account. But whatever case, it's credited, right? So that's nothing affecting to the profit. So this interest expense and income error, there is no effect to the profit. And the depreciation not recorded 30,000. So that depreciation is an expense you have to minus. So your adjusted net profit is 190,000. So the correct answer for question number 12 is answer number 2. Question number 13. The information of Sport Club for the ending 31st March 2020 is as follows. So they're asking the increase in the accumulated fund balance of the Sport Club. So keep in mind when they're asking the increase or decrease of the accumulated fund, so which means they're asking the surplus and deficit. So increase of accumulated fund is equal to the surplus, right? So the subscription income recognized in the income is 300 and written off you have to minus from as so that is as an expense, so we have to minus, and the donation is an income and the hiring place ground is an income, so your surplus is 600. So which means uh, the accumulated fund is increased by 600. So the correct answer for question number 13 is answer number 4. The increase in the accumulated fund balance is 600,000. Question number 14, they're asking whether the statements are correct or incorrect related to the partnerships. The partnership should not follow accounting standards when preparing the financial statements. That is incorrect. Normally, we are following accounting standards. Why? Uh, when we are preparing financial statements reporting, we have to consider the accounting standards, right? Number B, the salaries paid to the partners when they contribute to the management are not, yes, not an expense. That is a way of distribution profit. Partner salaries is not an expense, so you can't record that. That is an incorrect statement. In a written agreement, the partners can agree to share profit and losses based on blah blah. Yes, that is correct. And when there is a change in the ownership, yes, goodwill is estimated. That is also correct. So the question number 14 correct answer is number 2. And you have to use these information to answer number 15 and number 16. So in number 15, they're asking the profit, and number 16, the profit appropriated for rather for the ending 31st March 2020. So these are the balances of credit balances of current account, asset opening date and closing date. So balances, you have to record opening date balances here and the closing date balances here. And the profit and losses share in 3-2 and entitled and anniversary 450 and 350. So that 450 and 350 you have to credit to the current account. From that, already paid salaries as for to mean 300 and rather. So the when the salary is appropriated through appropriation account, that should credit to the current account. And when those appropriations are paid by cash, reimbursed by cash, your current account you should debit, right? And goods drawings also you should debit. Then you can find out this the profit distributed to the mean and rather by balancing this current account uh, with the given information, right? So your profit of the partnership, when they're asking profit, keep in mind most of the students are getting the profit distributed. That is not only profit. The profit means the profit that you appropriated to the partners. So how to appropriate? You are appropriating the profit that you generated from the income statement through interest on capital, partner service, and share of profit. So when they ask in the profit in the partnership, so that's mean the total of profit distributed, interest cap distributed, and interest on capital distributed, and salaries distributed total. So in this case, salaries distributed total 800 and profit distributed total 500. So total of the profit of the partnership is 1300. And then they ask in the question number 16, profit appropriated to Radha. So to Radha, salary is 350 and share of profit 200. So this equation is given because there is an interest. So this interest is not appropriated through profit. That is an expense, and that expense the partnership should pay to the brother. So that's why interest is credited to the brother. right? So when they are asking the profit appropriated to Radha, you do not consider this interest expense. Okay, so that's how you are getting answers for that. Question number 17. What are the statements are correct as per case 16? Depreciation amount for the period should always be recognized in profit or loss. No. Depreciation can be vary based on the available for use of that proper plant and equipment. B. An item of proper plant and equipment should be measured at the cost at the initial date. That's totally correct, right? At the initial recognition, you have to identify your proper plant and equipment at cost. And after that, you can follow up either cost model or the revaluation model. See, the surplus resulting on the revaluation of an asset in the current year should be recognized in other comprehensive income in absence of previous revaluation deficit. That's totally correct. If it is a revaluation deficit that comes from the last year, you have to written off that under other expenses, and the difference you have to record in the other comprehensive income. But in the absence of this revaluation deficit in the last year, so which means the total revaluation surplus, you have to record in other comprehensive income, right? 18, they are asking non-adjusting events. So your financial year end as at 31st March 2020, and the board of directors authorized this statement 15 June 2020. First one, a machine with a carrying amount destroyed by the fire. So fire destroys, we do not adjust for the concerned financial year. So that is a non-adjusting event. A trade debtor declared bankrupt as of 31st March before authorizing the financial date. So which means that can be adjusted. A public share issue was made after the financial date. You can't adjust that. So non-adjusting events are A and C only. 19, which of the following items should be classified as cash flows arising from the financing activities? Cash receipt for dividends on the ordinary shares purchasing the other entities. This is investing activities. When you are purchasing shares on another entity, so that's mean your business is doing an investment. So the return of that investment, the return of those shares as dividends, so that dividend income we consider as investing activities. But the dividend payment that the business is paying for their shareholders, so that comes under financial activities. Okay. Cash paid to purchase debentures of other, also investing. And cash paid for settlement of lease liability, yes, that is financing activity. So the correct answer for question number 19 is answer number 2. 20. Sumudu PLC purchased a machine on 1st of Jan 2020 for 2,500. So they are asking the cost that they recognition as per case 16. So purchase cost, site preparation and installation cost. Cost of initial test run and the return from the initial test run, we do not consider as the new update, right? So the correct answer should be the 3050, but in the answer sheet, it can be given another answer because before 2019 or 20, they consider the cost of initial test run and the return of that to the cost. But now, with the new update, we do not consider cost of initial test run. So we consider this as another expense, right? And we consider this as an sales, right? 21, Suranga PLC purchased a machine for 8 million on 1st of April 2017 and the residual value 8 years and the useful life 8 years and the residual value is 1600. The useful life of the residual value of the asset were re-estimated at 1st of April 2019 as 4 years and 1000. So from 1st of April 2017 to 1st of April 2019, it's almost 2 years. So the depreciation for 2 years as per the given information at the first 8,000 minus residual value 1,600 divided by 8 into 2 years. So the accumulated depreciation as per 1st of April 2019 is 1,600. And when the property plant and equipment remaining useful life is changing, you have to find out depreciation by getting the carrying amount of property plant and equipment distributed by remaining useful life. So in this case, uh, Your carrying amount, the 8,000 cost and 1,600 almost depreciated. So your carrying amount is 6,400. From that, you have to minus new residual value 1,000 and your new remaining useful life is 4. So your new depreciation after adjusting, after re-estimating useful life is 1,350. Question number 22. What is the provision for warranty to be recognized in the statement as per LKS 37? So here, with 1 year warranty, the provision for warranty which made in the last year 525, and the warranty expenses recognized for the year ending is 375 and 650, right? So warranty expense paid for the last year is 375. So which means you did an over provision in the last year 150. And the warranty expense recognized in the income statement is after deducting the over provision from the total provision for this year. So which means your total provision for this year is 800. So correct answer is good. Answer number 4. 23rd, they ask in the profit for the year and the total comprehensive income. The profit and the other comprehensive income for the year ending as the drafted value is 1,500 for the profit and the other comprehensive income is 800. So which means your total comprehensive income is 2,300,000. And what happened? The other comprehensive income represents the surplus of 800 resulted from the revaluation of land and building for the second time during the year. The revaluation of land and building for the first time is had resulted deficit of 350. So that 350 deficit written off, you have to deduct from the profit. You can't record the total surplus in the other company's income if there is a deficit in last year in the first time. So you have to deduct the deficit from the profit and the remaining value you have to record in the other company's income. So in this case, they record the total 800 in other company's income. So from that 350 you have to you have to add to the profit. So which means you are written off the deficit in the last year and that 350 you have to deduct from here. So you are correct. Adjusted profit is 1,850. Adjusted other company's income is 450 and the adjusted total company's income is 2,300,000. For question number 24 and 25, you have to consider these information. So first one, they're asking the inventory turnover ratio. So how to find out inventory turnover? Cost of sales you have to divide it by average inventories. So in this case, average inventories, opening and closing finished stock is given. So 800 and 600. So 800, 600 plus together and then divided by 2. So your average inventories is 700. So your cost of sales is 4,200 divided by average inventory 700. So your inventory turnover ratio is 6 times. And interest coverage ratio, profit before tax plus interest divided by interest. So your profit given here 1,280 and the interest is 320 and the interest you have to divide 3 by 320. So your interest coverage ratio is 5 times. So profit before tax is given directly. Yes, you have to find out the profit, right? Sales minus cost of sales minus operating expenses minus interest. So that is your profit before tax, right? And return on equity profit divided by equity into 100. So your profit is 880. So which means after deducting tax as well. So here you have to consider the profit after tax. And your equity is given 4,400. So your return on equity is 20%. And here earnings per share, your profit you have to divided by number of shares. So your profit you generated here 880. So here also you have to consider profit after tax divided by shares. So earnings per share is 2.2. Question number 26, they are asking cost of production per unit and the total variable cost per unit. So here total cost is given 250, direct cost 60 and non-production overheads are 100. So here it says all direct costs are variable cost. Further, 50% of production overheads and 25% of non-production overheads are variable cost. So they are asking the cost of production per unit. So direct cost is 60 and production overheads given here 90. So how to find production overheads? Total cost minus direct cost and non-production overheads. So here it's given direct cost, here it's given non-production overheads, here it's given total cost. So to find out production overheads per unit, total cost minus direct cost 60 and non-production overheads 100. So your cost of production is 150. And they ask you the total variable cost. So all direct cost, they are saying that variable cost. So that's 60. Production overheads. 50% of production overheads are variable cost 45, and 25% of non-production overheads are variable 25. So your total variable cost are 130. For question number 27 and 28, you have to find out from the given information. So what is the total overhead absorption of finishing cost center after the above errors are rectified? So the total drafted overheads given 35,000 and 36,000. How to find out? 5,000 into 7, 35,000. 4,000 into 9, 36,000. And the machine depreciation they do not record. So machine depreciation you have to distribute based on machine cost 4 and 3. And electricity distributed based on floor space, you have to revise that. And again, you have to correctly distribute the electricity based on kilowatt hours. So that's what happened here. So these are the adjusted overheads and these are the absorption rates. So your correct answers for question number 27 is answer number 4, and for question number 28 is answer number 1, right? Question number 29, they are asking the correct in relation to the cost volume profit analysis. The decrease in the unit contribution will lead to a decrease in the break-even point. That's incorrect. When the decrease happens in the unit contribution, your break-even point will be increase. B, the increase in the contribution to sales ratio will lead to decrease in the break-even point. That is correct. When the increase in the contribution sales ratio means the contribution is increasing. So contribution increasing means your break-even point is decreasing. Beyond the break-even point, the unit contribution is equal to unit cost, unit profit. That is correct. And the increase in unit selling price will lead to decrease in the break-even point. That is also correct. So correct answer for question number 29 is answer number 4. 30, Nihal PLC is concerned to purchase a new machine. The information given, they are asking the initial cash outflow and the cash inflow in financial year. So initial cash outflow, your purchasing price 1,100, installation cost 200, and the working capital 150. So your total initial cash outflow is 1,450. And annual cash flow given 335. To that, you have to add working capital recovery and residual value as well. Then you can find out cash inflow in final year as 585. Right? So this is up to from first question to 30 MCQ. So let's see how the other 20 questions from 31 to 50. From these slides onwards, I'm recording at a cafe and I have to pause this because my students are facing first paper tomorrow. So that's right. So this is would be quite noisy. So please follow that. Okay. So 31. State whether the following statement as to the general purpose financial statements prepared by the business true or false. These statements are prepared in compliance with the accounting standards. That is a true statement. These statements prepared primarily for the use of resource providers for the business. That is also true. These statements provide information relating to a past period of the business. That is also true. These statements provide information of the business measured only at historical cost basis. That is incorrect. The best example for violating historical cost basis is you are revaluating your property, plant, and equipment. So when you are revaluating your property, plant, and equipment, you violate the historical cost basis because you revaluate your property, plant, and equipment to the current market value. So you can do either historical cost basis or current market value, fair value, right? So this is a false statement. 32, the following has been extracted from the accounting of records of a business. So the assets and liabilities given as at opening date and the closing date. And here it says owner settle 120,000 loan from his personal fund. So which means that is additional capital. And owner obtains 90,000 in every year to pay school fees of his children. So that is drawings, right? So first of all, you have to find out equity asset opening date and closing date. So how to find the equity? Assets minus liabilities. And then you have to extract these information into the profit equation. So your profit equation is closing equity minus opening equity plus drawings minus additional capital. So from that, you can find out profit. So closing equity is 800 and your opening equity is 500 and the drawings that the owner made is 90 and the additional capital that owner invested to the business is 120. So adjusting from that, you can find out the profit 270,000. And the retained earnings, your profit is 270,000, but from that drawings you should minus. So your retained earnings balance is 180,000. 33. They given these transactions and then we have to indicate what is the prime entry book that relevant for these transactions and these transactions happens in a motor vehicle trading company. First one, purchase of motor vehicles on credit. So in a motor vehicle trading company, motor vehicles are the stock. So when you are purchasing stocks on credit, so that goes under purchase charge. And here, purchase of a truck on credit to be used to the delivery of motor vehicles. So here you are purchasing this truck to use in your organization, in your trading business, right? So when you are purchasing property plant and equipment to use in your business, so that should record in general journal. And C, sale of motor vehicles on credit, so that goes in sales journal. And the D, payments of sales commission, so you are paying in cash. So that goes in cash payment journal. 34, they are asking how these transaction affect into the creditor control account. So first one, purchase of goods with a list price of 100,000 on a credit subject to 10% trade discount. So here the list price is 100,000 and the trade discount is 10%. So keep in mind, trade discounts we do not post as double entries in accounting, but we have to minus the trade discount value from the total amount and get the net values. So in creditor control account, should be increased by only 90,000 from this transaction, right? After you deducting the trade discount. And the B, payment of cash to settle a balance of 50,000 due to a credit subject to 5% cash. We do not post the trade discounts, but we do post cash discounts. So cash discount, the total of cash discount and also the cash received from cash paid to the creditors should deduct from the credit control account. So which means the total 50,000 you should minus from the creditors. So from the transaction number B, the creditors are decreased by 50,000. 35, they are asking state two situations in which the historical cost concept violated. So I mentioned one earlier, that is revaluation of property, plants and equipment. And the other popular example for that is valuation of inventory at lower cost and the net realizable value, right? And recording of right of use of assets and the lease liability based on the present values. And these are the others, but these two, revaluation of property, plant and equipment and valuation of inventory at lower cost for the NRV. So these are the most common answers for violating of historical cost concept. 36, they are asking to write the journal entries to adjust these transactions as at closing date 31st March 2020. A. Goods were sold on 31st March 2020 for an order of 180,000. So this order was received in February with an advance of 60,000. So when you're receiving an advance at the first point, the double entry for that is cash debit, sales advance credit. So now that sales advance is converting to sales. So what happened there? Sales advance account debit 60,000, but the total is 180,000. So which means the other half, the other portion you did on credit. So trade receivables debit 120,000, but the total sales credit to the sales account 180,000. B. An agreement was entered by paying 90,000 to conduct a sales promotion campaign for 3 months period starting from 1st of March. And it has been duly operated since 1st of March. So which means from the 1st of March to 31st March, the only relevant month, relevant time period is only a 1 month. So from the total payment, you have to consider in your expenses for only for 1 month. So the other 2 months are prepaid. So prepaid promotion expenses debit 60,000, sales promotion debits 30,000, and the total credit to the cash 90,000. 37, they given these types of accounts and then they're asking classification. So of each accounting type. So bad debts is an expense, drawings is an equity. So equity normally have credit balances, but drawings it has debit balance. Provision of gratuity. So all provisions normally, not provision for impairment losses and provision for cumulative depreciation. But the other provisions normally we consider as liability. And the accumulated depreciation on office equipment is that is an asset. So assets has normally debit balances, but when it comes to the accumulated depreciation, so that asset account have a credit balance. 38, they're given these transactions that regarding to Roshan and Hashan partnership, and this Roshan and Hashan partnership is carrying their partnership activities without a written agreement. So the legal procedures that apply here is 1890 Partnership Ordinance Act, right? So according to that, Roshan and Hashan are entitled to 5% interest on capital. That is incorrect because in the 24th statement they are in agreement. It says not need to pay interest on capital or partner salary. So which means this Roshan and Hashan are not entitled to a salary as partners. That is correct. And interest of 5% per annum should be payable on loan provided by Roshan. That is also correct. And Roshan and Hashan should share profit and losses in their capital ratio. That is incorrect. They have to distribute their profit based equally, right? So that is how it says in Partnership Ordinance Act. 39, state the reasons of which other partners are entitled for each type of following. Yes. So interest on capital. This is this is in interest on capital. So that is for the contribution of to capital because partners are investing their money to the business. So for that, the contribution to capital, they are paying interest on capital. And salaries of partners. When the partners are contributing to the management, so partner salaries should pay. And profit share. So if you invest into any type of business, so which mean that's mean you are taking a risk. So to that risk, you are getting a profit. So in partnership, profit share is given for the partners risk taking by investing money to the partnership. 40, state whether the following statements are true or false as per LKS 8. The changes in account estimates should be adjusted in financial statements prospectively. That is correct. Yes, that is correct. Sorry. Prospectively mean you have to adjust that for the current financial year and then also for the upcoming financial year. B. Accounting policies changes are always applied retrospectively. That is incorrect. Some are
retrospectively and some are prospectively. The change in the depreciation method of an asset is a accounting policy change that is incorrect. It is a accounting estimate change. It is an accounting estimate change. The change in the useful life of an asset is a change in accounting estimate that is correct. 41. Primary users of general purpose financial statements are investor, lenders, other creditors, management, any stakeholder, any two stakeholders you can record here. And B, an asset is defined as present economic resources controlled by the entity as a result of past. So this is purely theory, right? So this is asset definition, and this is they are asking the stakeholders of a business in accounting type of view, accounting point of view. So accounting point of view, right? So this is purely theory. 42, they given the information about lease agreement, and then they asking the current liability and the non-current liability at the end. So the initial lease liability is 1,713,000. So that is the opening balance of lease creditor at credit. And the interest that you have to pay to the lease creditor for this year is 257. So this interest is also payable to the lease creditor. So that's why the interest is credited into the lease creditor account. And then you are paying the installment 600. So cash credit, lease creditor debit. Then you can find out the closing balance of lease credit as 1,370,000. But this 1,370,000 you have to split between current liabilities and non-current liabilities. So in current liabilities, your installment is 600. From that installment 600, you have to minus the interest that you are going to pay in next year. So it's given here 205.5. So installment minus next year interest, then you are getting the credit portion that you are settling in next year, 394. And in non-current liability, the balance is 1,370,000. From that, you are settling 394.5 in next year. So the remaining portion you are settling in the other year. So 975.5 comes in non-current liabilities. Yeah. 43. They given this information and then they ask in the retained earnings, closing balance, and the stated capital. So the stated capital and the retained earnings opening balances given here, and the profit for this year is 700,000. So that profit you have to credit to the retained earnings, and from that you are capitalizing retained earnings 800. It's given here. And then you are paying dividend 300, it's also given here. So then you can find out the retained earnings closing balance as 1,200. And when it comes to the stated capital, the balance is given and the reserves capitalization is given 800. And further that, they make a right issue by collecting 400. So your stated capital closing balance is 2,500,000. 44, we have to state whether true or false in following statements as per SLFRS 15. A contract with the customer could include several performance obligations, that is correct. Revenue and all other income of business entity should be recognized in a financial statement only as per this standard. That is, an entity should recognize revenue on a contract only when each performance obligation in the contract is satisfied. That is true. The transaction price is the amount of consideration to which an entity expects to be entitled in exchange for transferring promised goods and services. That is correct. Right? So this is also pure theory. 45. The quick assets ratio of a company as at 31st March 2020, 1.1 is to 1. The current assets of a company include inventories 250 and the prepaid expenses 50 in addition to other assets. On this day, the current liabilities was 500,000. So if the current liabilities were 500,000, then you can find out quick assets. So your quick assets is 550,000. So quick assets means subtracting inventories and prepayments from the current assets. So then you can add inventories and prepayments to the quick assets. Then you can find out current assets. So the current ratio would be current assets uh, divided by current liabilities. So 1.7. 46, again, they are asking true or false in relating to the management accounting reports. These reports are available for use of all stakeholders. That is totally false statements. Why? The management reports is only can refer by the decision parties, the higher decision parties, the management levels. These reports provide present and future information. That is correct. These reports are prepared annually on demand. That is incorrect. Not annually. It can be a day, week, month, 6 months. It's vary based on the demand, based on the requirement. These reports are prepared based on the requirements of an entity. That is true. 47, they are asking source documents for these activities. Request of material by the factory from the stores, material requisition notes or stores requisition notes. Receipt of material to the stores from a supplier, goods received note, right? Calculation of the time spent by a factory worker on a job card, job ticket, and used of electricity in factory, electricity bills. So these comes under management accounting, material control and labor control. 48, they're asking the reorder level and the maximum stock level. So actually, I didn't mention how to find out here, right? So your reorder level should be 3,000, and maximum stock level 7,000 kilograms. Yeah, I will post when I am uploading the video. Before that, I will post how to find out the reorder level and maximum stock level in the workings, right? So that is my mistake. 49. These information is given and they are asking the contribution per participant, fees cost, and the number of participants required to cover the total cost. So which means they are asking what? Break-even point. A welfare society is organizing an awareness program on environment protection for people residing in flats. A media organization has agreed to pay the welfare society 2,000 for each person participating in this program. The welfare society has to incur cost of 1,500 for each participant. The estimated the other estimated expenses are given below. So these all three are goes as fixed cost. So your total fixed cost is 60,000. And how to find out contribution? Selling price minus variable costs. Your selling price, so which means that media organization had agreed to pay per person 2,000. From that, you have to minus 1,000 for 500, the variable cost. Then your contribution is 500. Then they're asking number of participants required to cover the total cost. So that means they're asking the break-even point. So how to find the break-even point? Fixed cost divided by contribution. So your fixed cost is 60,000. Your contribution is 500. So at least 120 participants should participate to this program to cover the total cost. Okay, so the last one, 50, Alpha PLC is considering to acquire a new machine to this business. So the cost of the machine, 1,700,000, and expected useful life and the residual value 5 years and 200,000. So the management accountant of the company has evaluated the project and calculated its payback period as 2 years and 6 months. So the net cash flow estimates of the project as follows. So they ask net cash flow and the profit in the third year. So first find out the net cash flow. So your initial investment is 1,700, and from the first year and second year, the accumulated cash flow are 1,350,000. Right? So they mention here the payback period is 2 years and 6 months. So first 6 months in third year, the payback value is 350. That is for first 6 months. So which means the total net cash flow for the third year is 700. Why? The first 6 months cash flow is 350. So first 6 months 350, last 6 months 350, altogether the total net cash flow is 700. And then they ask in the profit. So difference between net cash flow and the profit is what? Depreciation. We consider depreciation as an expense when we are finding the profit, but we do not consider depreciation as a cash flow because it is not a cash flow when you're finding the net cash flow. So if they are asking the profit and given the net cash flow, you have to find out the depreciation, and that depreciation you have to minus from the net cash flow. So how to find the net depreciation? First minus accumulated depreciation divided by 5. So here cost is 1700 and residual value 200 divided by 5. Your depreciation is 300. So you can find out profit in the third year. The net cash flow of the third year is 700. We found here. And the profit, sorry, the depreciation is 300 and your profit is 400. So this is 2020 A-level first paper discussion. So sorry for the noise because I'm at the cafe and I have to upload this video because my students are facing first paper exam tomorrow, right? So keep in touch, do share with your friends, and I will post the other first paper discussions as well up to 2019 from 2019 up to 2023. Thank you.